Welcome to TFN Smart Trading Action Alert. I'm Laura Cadden. In March, nickel prices reached a record high of $50,000 per ton. This is largely the direct result of demand from China and another symptom of the ongoing commodity supercycle. 70% of all nickel consumption is related to the production of stainless steel, of which China is now the world's largest consumer. With limited domestic supply, China's needs have sent demand and the price of nickel skyrocketing. Will it continue? And where are the best opportunities for the savvy investor or trader? To help us with these questions and to learn more about this market, I've invited J. Christoph Amberger, executive publisher of the popular Red Zones Profits Trading Research Service. So, Christoph, after hitting a record high in March, the price of nickel promptly dropped 13%. What is the cause of this volatility, and do you think prices will actually continue to rise?
Well, we are looking at a number of different trends that are converging right now. You mentioned the commodity supercycle, and certainly we have that going. China is industrializing, has been industrializing for a decade or more. India is joining right at its heels. Russia is booming right now. And the demand for all kinds of commodities, be that metals, be that energy, fuels, whatever, is just going through the roof to feed that need. That has resulted in steady demand, rising demand, and an inflexibility on the demand side. We, of course, do have corrections that are occurring in any market that is driven by high speculation. But if we're looking at the other trend that is going on is a increased tendency of mergers and acquisitions, especially in the mining field. You remember Norilsk Nickel just bought up one of the largest US producers to lock in a larger chunk of supply. I don't believe there's a single second tier, third tier Canadian mining company that hasn't been bought up yet or acquired yet one way or the other. I believe FNX Mining is probably the only last holdout, and I read this morning that there's Xstrata is probably going to buy up that company too. So there is a lot of consolidation going on, and with that has at its main purpose really the consolidation of supply to leverage against inflexible demand.
Well, stainless steel is used most exclusively for what? Why is this demand so enormous right now?
Stainless steel is used in almost everything. China, of course, the building boom requires steel, requires nickel, requires molybdenum for high tensile steels, especially in the energy industry. Nickel is needed to make steel for pipes that are corrosion resistant for pipelines, for gas pipelines and so on. So we have really here the increased need of fuel and energy in those booming economies, creating another need that needs to be satisfied for that steel commodity really, and one feeds off the other. And this is something we're going to be seeing probably for the next half decade at least.
Well, you mentioned Norilsk Nickel. Of course, they are the largest global supplier, but they've had problems recently, along with the export licenses for platinum.
Yes.
Do you foresee being able to fulfill these requirements globally, or do you see a lot of other companies really kind of stepping up to the plate?
Well, in regard to the export licenses, I have been interested in Russian power politics for a long time, being from West Berlin originally. I believe that we're seeing a bit of a show being put on between the Russian government and one of its main commercial arms, which is Norilsk Nickel, much like Gazprom is its energy arm. I believe that the correlation between the state with its licensing requirements and the corporations in Russia can be leveraged very nicely to create even tighter supply situations. We see that in the case of platinum right now, where Norilsk Nickel cannot export because of a delay in the license, and it is purchasing platinum on the open market. They have removed their platinum supply out of the equation. They're shortening the global supply probably in view of increasing platinum prices. We have the same going on in nickel, where and cobalt, of course, where Norilsk Nickel has been trying to get as much of that metals pie as it possibly can in view of controlling supply, again to leverage inflexible prices. They just announced that they are raising their nickel production quotas that they have set for themselves. So I believe they will produce enough nickel to make a handsome profit of it. I don't think that it necessarily will translate in an oversupply, because that would not be in the interest of those companies.
But there's other players out there, correct?
Yes, definitely. There's plenty of companies, not only Canada, not only Russia. We have plenty of activity going on in Malaysia, for example. In the Philippines, there's of course the old standby Freeport-McMoRan, and the Indonesian mine producers. And one of my favorites is really Lion Ore, which is a Canadian company with substantial mining holdings in Botswana, Australia, and a very well diversified mining portfolio.
So are these truly worthy of investment, or should one turn to kind of exchange-traded funds to get a
Well, exchange-traded funds, in my opinion, of course, they are also in the business of buying up supply to further, leverage inflexibility and nickel prices in that case. ETFs are a bit like mutual funds to me. They provide a pretty good balance of risk and reward, but the upside, in my opinion, is not really worth the attention of a trader and the risk that a trader would like to take on. So yes, there are companies that we are watching, and definitely that we're recommending right now.
Is there a specific one you can tell us about?
Well, I could tell you about a company, but again, we have a little bit of a limitation here. This is a company that is currently trading for 44 cents on the Australian stock exchange. We are viewed here by hundreds of thousands of people every week. Any mention of the stock really could create another pressure on that opportunity. Our colleagues from Red Zone Profits have created a report for their subscribers that I would invite you to peruse after viewing this video. And we have to be a little careful, especially with those penny shares that can really respond to increased demand, artificial demand created by media mention.
Oh, I see. Well, thank you so much for the information. Interesting
Anytime.
topic. To learn more about Red Zone Profits Trading Information Service, go to www.redzoneprofits.com. Please tune in next week for another profitable opportunity on TFN's Smart Trading Action Alert. For TaipanFinancialNews.com, I'm Laura Cadden.